Good morning, everyone. Happy to join you in this sort of very unprecedented time, in a, I guess, very specific setup that we're having today. Our panel today, I think, has a very diverse range of speakers and topics that we feel we can bring to you today. My name is Rakosi. I'm a partner at CMS, a globally operating law firm. I'm based in Vienna, and I'm heading our private equity and venture capital practice. We have a, split audience that is here, split panelists that are here in person, and then others that are joining electronically. So I hope everyone's on the line at this stage. But I think we're just gonna sort of dive into our agenda, portfolio companies, how they're doing, how they're weathering the storm and the crisis, how they may have fared in the past sort of half a year, what we believe or what you guys believe the outlook is, and sort of hopefully setting a positive note to an otherwise tough 2020. But I think, we'll hear from people in practice. We have a sort of a split in terms of the investor side and the company side. So we're hoping to get many different angles as to how the crisis may have affected daily life, investment life, sort of effects on the operational level, and how we believe this can be taken forward in the future, hopefully with some lessons learned, and hopefully with sort of a better feeling on how future crises can be dealt with. But I think before we go into the substantive side, maybe we can have a quick rundown as to who's on the panel, so that also the audience can understand who we're talking to and what the various experience angles are. Maybe Johanna, you wanna start?
Yeah, my name is Johanna Konrad. I'm COO at kompany with a K, that is. We are a regulatory technology business, provide access to commercial registers worldwide and banking registers, mainly for the purpose of regulatory compliance. Our main customers are financial institutions, fintechs, lawyers, tax advisors. We operate worldwide. We are based in Austria. We were founded in 2012, and are scaling from here.
Rossen?
Thank you, Alexander. My name is Rossen Ivanov. I'm managing partner at BlackPeak Capital. We are a growth equity fund focused on backing high growth SMEs out of Southeast Europe. Generalist approach across industries, and focused on companies which have international exposure and presence.
And then in our sort of virtual discussion room, we have Regina, Hodits, and Elisabeth. Regina, do you want to introduce yourself next, please?
Absolutely. So, Regina Hodits, you can hear me well like this?
Yes.
Okay, I have a bit of an echo, but I try to adjust it. So, Regina Hodits, I'm a managing partner at Wellington Partners. We are a German-based, globally but mainly Europe-centric life science venture fund. And so we're investing in anything that really changes medical practice. So the COVID crisis certainly has been not only a challenge, but also an opportunity for us.
Perfect. Elisabeth?
Yes, hello everyone. Thanks for having me. Elisabeth Löwenbourg Brzezinski is my name. I'm with Acton Capital in the investment team. We are a venture growth fund out of Munich. We have roughly 500 million under management, generalist investors, including digital health, digitally enabled businesses are at our core, and we are looking for sustainable business models and also for diverse founders, and very happy to be here today.
Excellent. Well then, thanks everyone. So I think as you have gathered, it's a sort of a pretty diverse crowd generally in terms of investing and operative, also all sorts of industries represented. So our aim is to give you in the audience hopefully somewhat of a comprehensible take on what has happened in the past year and how things will be going forward. In terms of housekeeping, and I think we're all trying to manage this new situation as best as we can. I think we have you have the opportunity to ask questions in the forum. which I will try to monitor as we move along. So if you have sort of any questions at any point in time, would like to steer the conversation in a certain direction, then feel free to sort of note this in the chat. And otherwise, I think we'll just go what we believe are sort of the interesting topics as we see them, and then we can come to a round of questions towards the end of this session as well. So I think we're all flexible and ready to go. But I think without further ado, let's maybe dive into sort of how COVID, with all the various elements there is to it, has affected investor or investors' perspectives on things. Maybe let's start with the investing side. Rossen, I mean, you guys have a very sort of diverse portfolio ranging from all sorts of industries, and I take it COVID was sort of had a different impact on different types of your ventures.
Yeah, one of the big questions has been throughout what's the impact of COVID on SMEs, which are the backbone of the European and any economy. So it has been very interesting, challenging to observe also our portfolio and to react to it. And I would say, luckily, overall our portfolio actually has continued to grow in the crisis, and that's, as I say, luckily, because the bulk of our investments have been in sectors which have turned out to be resilient. So we have a number of investments in IT, renewable energy. We actually have an investment of a Bulgarian team doing internet in India, in the new Delhi area, which has exploded. And so that has managed to carry the portfolio overall, and we've grown 10% year over year for the half of the year. So that's been the good news. Then within the portfolio, as a second category, we've had a number of companies which were directly hit negatively. So for example, we are investing in a company called Watopia, which is the global leader in manufacturing of indoor climbing walls. Right. Obviously, climbing gyms got closed, the business was affected. And in those companies, we've seen obviously a rapid revenue decline. The positive, again, trying to find the positive, is that luckily they were well capitalized, and we took quick measures in order to reduce operational costs and keep them profitable. And we are now looking at the crisis as an opportunity to maybe add on and buy some of our competitors who probably are not going to be in such a good position. So we're trying to find the best out of these cases. There was one interesting case. We have one portfolio company which we were a bit over leveraged even before the crisis, because our business model required a lot of leverage. It was in AVCO and renewable energy projects. Right. And so we were having some liquidity issues before the crisis, and the crisis actually helped us because the debt moratorium that were in force was a convenient way to actually restructure our debt and give us enough time to sell some assets and bring the company under control, which we've done in the meantime. So there was a silver lining to it again.
Silver lining or blessing in disguise in a certain.
And sorry, the final one, which was interesting, we were an investor in the #1 tour operator in Bulgaria, which I would say, luckily, with a big sense of irony, went bankrupt when Thomas Cook went bankrupt, because we were a representative of Thomas Cook. So they've saved us the trouble of going bankrupt now. So unfortunately, we lost that company, but luckily, the rest of the portfolio has compensated. And so it's a mixed bag, but you survive. You find ways to adjust for the difficult case, and you move forward.
No, that's interesting. And so it's good to hear, well, that overall your portfolio is well set up, and well, I guess so. COVID wasn't the death knell is not to be blamed for everything in this situation. But yeah, I think it's an interesting aspect on the operational side, Johanna. I guess what have you found, and sort of among a lot of negatives, I assume, is there also any positive side effects that you had from the crisis or are having?
Yeah, so we are also luckily in an industry segment that is actually benefiting from current development. So on the one hand, we have already in the past seen an increase in kind of regulatory pressure when it comes to compliance, which is the sector we're active in. And now that there is a lot of kind of publicly funded economic stimulus, we do expect this to continue and the pressure to increase. So that is something that is positive for us and the usage of our services. Also, since kind of risks with suppliers, for example, tend to become larger when there are economic issues occurring, measures taken in order to avoid those risks are being pushed, and that's also something that we benefit from. On the other hand, as many other companies, we have seen some delays. So especially in the beginning of the lockdown, and especially with our larger potential clients, we saw a certain freeze in the processes. So on the one hand, kind of decision making was halted because there was unclarity about what would happen. And then on the other hand, there were reprioritizations ongoing. So projects were kind of delayed or pushed back versus what was initially planned. So that impacted us. Some smaller organizations were actually moving quicker during this phase. I guess really depends on from which angle you come from. And hence that was more or less balanced out, I would say.
Okay. That's interesting. Yes, I mean, I think that's also what we in our advisory practice have seen as to various clients, at least, well, being shell-shocked at first, of course, and then you've had a bunch of internal issues to deal with, whether it be moving the workforce from in-office working to remote office, which I think by and large, at least what we've seen and also in our organization, has worked very well. I think better than most of what people had expected before. So even, for example, in our organization, people that would have thought home office is never an option, I think have found out that it is an option, and I think the workforce is still productive in that setup. But yeah, I think after an initial sort of shell shock period, most of them went back to resorting to resolving some of their internal issues, which oftentimes are things that you may not have dealt with before. But hopefully, the trend to external growth and external activity is now back. In terms of relief measures and everything that was put in place to sort of combat the situation, do you feel that has helped you guys on the operational level?
Yeah, certainly to an extent, especially in the beginning. So the development wasn't really foreseeable in terms of how the top line would continue, so to say. So we took precautionary measures, and we used the opportunity to put a certain part of our staff on short working arrangements. We also used the opportunity to delay some of our costs, or social insurance costs and so on, which was really helpful because initially we also serve small medium enterprises. We are a clearing house of the Republic of Austria for the commercial register, and out of that we have to do that, and there we saw kind of an initial dip, so we were able to basically cover that by delay some of the costs. As said in kind of our previous conversation, I mean, all those other stimulus measures that were then put in place, especially for younger companies, obviously are helpful, but don't cover companies that are a bit further in their development. So we don't fall into the category startup any longer, since we are too old for that, meaning whilst we were doing fundraising, we would have benefited from something like matching grants, but these were not available for our kind of category. So
sure, understood. Well, maybe I don't know, Regina, Elisabeth, do you have any sort of impressions in terms of relief efforts as you're monitoring investments across multiple countries, and sort of you're seeing not just the Austrian angle? Do you feel that the measures have been sort of equally efficiently applied, or do you see that there are sort of various standards and also accommodating levels of what can be done in the crisis?
Yeah, so maybe I can say something to that. First of all, what I want to say is that, of course, we, being in an equity financed industry, we actually have a big advantage that in principle our companies have kind of a shock absorber, and this is us, the investors, and it is actually our responsibility to finance our companies such that they can weather crisis. And I think especially in areas like on the life science side, where development take long and are very, very costly, and also in several of the other deep tech areas, we have to weather a number of storms. And what the COVID crisis, I think, has shown, especially in the life science industries, is that our companies are quite well equipped with that. So I fully agree that come March, everybody was, as you said already before, pretty much shell-shocked. That goes for our own company, and that goes for the portfolio. Nobody knew how that would actually be developing, and everybody was thinking, well, do we need to apply for Kurzarbeit, or how are we actually going to cope with kind of the rents that we are paying? And in the end, all of our companies really within weeks had plans on how to cope on how to cope with ever-changing regulatory environments, which is also something I think in the life science industry is not uncommon, because what has been thrown at us from, for example, the medical device regulations in Europe has also been a moving goalposts on a, maybe not on a daily basis as with the COVID crisis, but on a monthly basis, definitively. And I think what that actually shows, and just also making a bit of advertisements for venture in Europe, in my view, if you look around, the venture industry in Europe has fared well, has really coped with the crisis, and especially out of that, of course, I have to say the life science venture industry has once again shown that we are a stable industry, that we can cope with changing environments, and that we can actually do a very meaningful contribution, not only to the returns of our investors, but also to society. This is something that, I mean, I'm a big believer of that. I've been in this industry for 20 years now, but I think the COVID situation really makes that also seen to the outside world. And so several of our companies, and of course most noteworthy, Themis Bioscience, a Vienna-based vaccine company, where we will also have a chat more this afternoon, are really trying to deal with finding solutions to the crisis, but really by actually tackling them at the bottom. Themis with a vaccine, but we have companies in Germany like Adrenomed, or a company that's actually a joint venture between Austria and Germany called Sears, that are tackling the most serious cases and trying to find relief for people that actually have to go into intensive care. And several of our other companies are either engaged in diagnostic solutions. And so the whole industry as such, not only us, has really responded to say this is a call to action. And we've, I think, shown that we're a very collaborative industry. So in this sense, it has been an opportunity, and not much has been needed with regards to government support. However, we're forgetting about the companies that are not at the forefront of COVID. And if you actually want to run a clinical trial and there's a lockdown, then you better be in an absolutely life-threatening situation so that people are still willing to talk to you, because otherwise no hospital will talk to you about running clinical trials. So a number of our companies did incur delays because they couldn't really progress with their development plans, and so support was needed. And I've been until this summer the spokesperson of the German Private Equity and Venture Capital Association, and we've been very much involved in setting up also the facilities in Germany to help the companies. It has taken maybe a month longer than most people had hoped, but the government has really gone out of the way to say, we're going to work with a solution that we can put in place before summer, and it has actually worked out. And so the companies in Germany now can apply for matching funding. The smaller companies that don't yet have VC investors can apply for local funding from the local country banks in Germany. I don't know exactly how to translate Landesbank. And so in my view, it was again an example to see how our whole ecosystem and industry is really working in a collaborative spirit. And I have to say, it's something that we've all known for a while, but actually seeing it in action, hopefully appreciated by the public, was still actually for me probably one of the most positive things that came out of the crisis.
I think that's certainly, yeah, thank you for this, certainly a positive dynamic in what we're facing these days. And it's also interesting to see that even within the the life sciences medical industry, which of course is one of the winners, or sort of the unintended winners of what has been happening, that even there's sort of a sliding scale as to what on the more sophisticated level it's clear that those have been thriving, and maybe on the more technical level it's maybe not as easy sledding as one would have thought. But on the Themis, I think Regina, we will not let you leave this panel without further details, even if you have a session this afternoon. I think we'd like to get some more insight on this, but before maybe...
You see the whole Themis merchandising there on the back side here, so absolutely Themis is front and center on my mind. I'm very happy.
You're ready to go. That's good. Elisabeth, on Acton Capital's situation, how have you found the whole past half a year within the various investments that you've done, and how you have dealt with your portfolio companies in with those various challenges? Can you elaborate on your situation, please?
Sure. I still remember quite vividly Friday, March the 13th, when we decided to shut down our office operations and go all into home office. And then also the same thing happened for our founders. So we had, as I guess a few others here, we had like companies going like 90% down in revenue. Suddenly you had to do follow programs at very short notice. We had to fire people over Zoom. And I must say, working in early stage venture, we are used to founders who are very positive and constructive. But in those difficult times, we were just super impressed by the creativity, resilience, and really quickness and agility that the founders showed in first securing the employees, securing the clients, and stabilizing the business. So overall, I think I would second what others have said, that there was a very quick adaptation and overall mentality that kicked in. I also second, I think Rossen said it at the beginning, there are companies who were more and companies who were less impacted. Overall, being in digitally enabled businesses in the tech sector, we are of course less impacted than many other sectors of the economy, and in that sense very fortunate. Just look at the returns of the Nasdaq over the S&P in the 500 in the last 6 months, or if you look at the market cap of the big six, now I think over 5 billion or so together versus the $3 billion of the Euros stocks 50. So the digital sector, the tech sector has probably fared much better than many other sectors. And in that sense, you see, the obvious winners, if one, I don't like the word, but if one could say so, we have a telemedicine provider, AVCO, largest one in Canada. They had the challenge how to grow and how to stem that sudden influx of business and huge operational growth in a time when there was also so much medical emergency. And we have companies like, for instance, company like Entertainment or Art Night, who was very much based on offline physical events, getting people together around a fun activity like painting pictures. All that happened offline, so suddenly nothing of that could happen anymore. The team reacted very quickly around Amy and David to organize live online events, which in some of the verticals like Bake Night turns out to be even a bigger winner than offline events, because people like to bake in their kitchen and to do joint workshops on macarons, cheap macarons, or like a Sachertorte. There's a cooperation with the Austrian tourism industry as well on that matter. So I think there were new opportunities which opened themselves up, which maybe were on the radar somehow before, but there wasn't the impetus to really go about it quickly. And we see there's a huge amount of adaptation in that sense and really good new opportunities. Overall, I would want to say what we also see, the renewed focus on costs and operational and capital efficiency, I think is a good thing in the industry where valuations have been really, really high and influx of capital had been really high over the last at least 5+ years. And I think it goes in nicely together with the trend towards more sustainable business development, more sustainable growth, maybe trying to get to profitability earlier, standing on your own feet, and maybe thinking one more time about that international expansion and when we need it. So I think that also hits on a macro trend that many of our founders at least feel for a more sustainable type of growth.
Thank you. That's very sort of interesting input, and yeah, I think a renewed sense of creativity, or sort of a recalibrated sense of creativity, I think has positively affected various industries' outlooks, and maybe there is a silver lining in some of what we're seeing in this regard as well. Maybe let's on sort of deal-making activity in the crisis, as you've all, I guess, seen, and as we also have seen in our practice, there's sort of a different segments of transactions in that period. I guess deals that were close enough to finalization or signing prior to the peak of the crisis really manifesting itself. I think parties were trying to get things over the line as quickly as possible. Other deals, of course, that were in the early stages got postponed or discontinued altogether. But what has sort of your feeling been, Regina? I guess it's maybe back to you. Easy to talk about the deal that very prominently has occurred. The Themis one. Do you want to share sort of a few of the war stories as to how this was feasible within sort of very challenging times? Not in terms of, well, your industry then, but presumably within the whole setup of people not being able to come together as much, maybe communication having to be put into a different channel of more electronic means, and how that all was able to be reconciled in managing to get the Themis transactions over the line in Q2 of this year.
Yeah, absolutely. It's been quite interesting because when the crisis started, we were all kind of saying, like, how are we going to deal with really the fundraising situation for our companies, and also, of course, with the deal making. And all of us were actually assuming that things would slow down considerably. And I had actually planned my Corona summer vacation this year. Honestly, it hasn't occurred, and it wasn't only for me. If you look at the life science industry, we probably had the busiest last 2 quarters when you look with regards to actually listings on Nasdaq, and also with regards to some of the sizable transactions that happened, those outside of our portfolio. Deal activity certainly has, if anything, increased rather than decreased, and deal volumes have increased. And a friend of mine actually just brought his company on Nasdaq, Lion, and he called me and said, listen, I've not met my investors in person at all. We did the whole roadshow virtually, and that was actually early in Q2. By now, actually, I think the days of the roadshows where people are traveling to remote places in the US to actually find some investors in Texas are gone. We see so much activity now being done over video calls like this one and over Zoom, where people get comfortable with the story and say, listen, I anyway need to look in the data room, and people need to be able to actually sell on the video. I think we all had to learn to actually look at the camera and not at the images on our screen, and it took us a while. And so I think there's a new norm out there. People will get used, especially on the public side, to actually selling electronically, and the world will stay very differently, and it has become very differently. And that has taken away a lot of hurdles and has actually shortened timelines on transactions. So that's something we see in general. We've also brought our portfolio company, Matix, public via a spec vehicle onto Nasdaq during the Q2. They had a bit of a dip initially by some of the shareholders not willing to wait until they actually made more returns, but now they're actually up to a really good track as well. Also something that was in principle done completely remotely. Coming back to Themis is kind of a blend of what you said. There have, of course, been signs that there's interest in Themis before, but when we invested in the company, this was a prophylactic vaccine company, and a number of you know all of these debates about, are vaccines good, are they bad, should I vaccinate my children? When if you ask me, yes, you should, and not doing it is actually not doing a service to both your children and society. But this was certainly not the view of everybody. And it was not something that was really high on the agenda of a number of also the potential acquirers. So actually, Themis was one of those companies where we had also our exit expectations were in the kind of, let's say, good to moderate stage. But honestly, where we ended up was way out of the expectation that we actually had in our own books and towards our own investors. And this is not only a development for Themis. I think what the industry has realized that we as a whole over the last 20 years have pushed aside things that we kind of thought are not really relevant, and that's both for prophylactic vaccines. And in my view, the next thing that will happen is that we'll actually see a pandemic with resistant bacteria. So if you look at our investment strategy, this is something that does feature in companies like Sniper. So we're actually preparing for the next one. And I think we also as a society really have to say, like, how important is our health and protecting our health to us. Coming back to the Themis transaction, we had a board meeting at the beginning of March where we actually faced the decision, should we fully embark on a COVID vaccine, or should we actually bring the tropical disease vaccine that we have close to final stages of development further. And we had a hard discussion of whether there would really be enough attention on a COVID vaccine from a commercial standpoint that it makes sense for us. Luckily, we took the right turn. 6 weeks later, we had an offer on the table, both for taking the company via a crossover round public in the US on Nasdaq, and also via an acquisition by MSD, that's Merck Sharp and Dohme from the US, who were already a partner with Themis on some collaborations and also investors in the company. So they didn't know the company, which of course helped a lot. And basically we had an agreement on the transaction also, I would say about 4 or 6 months after the initial offer. But then the whole political haggle came, because by that time, all of the struggle about vaccine supply happened. And although neither the Themis guys nor us can talk a lot about that, but we are aware that there were several discussions about from MSD with highest political sides to actually make sure that this deal got the blessing of the different kind of governments and that were involved here. And this was US, France, Austria, and we were kind of in the middle of all of that, luckily not having to weather that storm. And in the end, for us as investors, it was the choice of taking the company public versus actually having the company in the hands of a larger organization that can really secure global supply. And we've voted both for our investors on having kind of cash at hand rather than paper on the stock market, but also for actually having a chance to really secure global supply of, in our view, one of the leading contenders for actually making the race for the vaccine.
Wow, yeah, so you were...
I could go on for hours on this, so you have to ask me questions or stop me.
Absolutely, no, I think you were at the forefront of many things as pertaining to this crisis, so this is very, very interesting to get the insights on this. And well, I guess we're all in everyone's interest. We're hoping that sort of the substantive development will go as swiftly and sort of as efficiently as possible. Well, I guess that sort of takes us to maybe one angle on the investor side in terms of current landscape and what that means in terms of new opportunities that the crisis may have brought. Just by way of a quick sort of background on what we do at CMS each year, we have what we call the European M&A Outlook, where we survey across about 200 market participants in the PE industry, also corporates, as to what sort of the general perception is on the markets, how they view the following 12 months to go in terms of M&A activity, M&A appetite, industries with particular sort of attractiveness. And of course, this year was sort of an interesting dynamic, because back when we took the survey, and we do this in conjunction with the merger market across Europe, across the world actually by now, is that, Q1 and Q2, which is when the polls were taken, of course, displayed a somewhat pessimistic outlook generally. But over the past, let's say, few weeks, couple of months, of course, let's say, pessimism, I think, has turned into a moderate, let's say, outlook that is more optimistic, more opportunities for, let's say, selected deals in terms of market consolidation and bolt-on, I guess, is something that certain industries are definitely looking at. Rossen, what's your take on this in terms of what you're monitoring?
So we have two hats now. One is to look at bolt-on acquisitions for our existing portfolio, which we are actively looking for a number of the companies, and we see a great opportunity now, because the crisis will allow you to enter at better valuations at certain companies, and a lot of our competitors for some of our companies are much more willing to talk on various forms of partnerships. So it's certainly, we see that as a priority area, and in fact we are combining, for example, in one of our existing portfolio companies, we're bringing a much bigger fund, a US-based fund actually, which, if we get the deal done, will be their first deal in Central and Eastern Europe. And they're looking to put together our company together with a German company, create a leading pan-CE DACH player in that space. So the thesis of growing through consolidation now is very strong. So that's on our existing portfolio. On our new, we're raising a second fund now and looking actively at pipeline. The crisis is a very good, was the right word, a funnel in order to help you select the best entrepreneurs, right? So, because if companies are managing to continue to grow through this crisis, I mean, it means that they're in the better industries, the entrepreneurs are better prepared, and so it in some ways it makes our job easier, because they, it pre-selects some of the entrepreneurs already. So we are, these are all the challenges related to travel and many other aspects of the crisis, but we look at it quite positively as an opportunity again.
Elisabeth, any take on sort of your end of the story here? I guess PE, what's your view on valuations? I guess one of the factors that's oftentimes thrown around is that valuations were too high before. Of course, that can't be said for unequivocally for all the industries, but valuations had reached a peak, maybe too high of a peak, and now maybe this moderation effect has taken its place. What's your take on? Does that create new opportunities for you? Has it recalibrated your investment focus in terms of what you're looking at and how you perceive the markets to be currently?
Yeah, I think when thinking about the valuations, we need to look at the underlying causes, and I actually see a lot of those causes unbroken and continuing. So that's clearly the decade-long low interest rate environment, the huge influx of capital from central banks across the world, and the lack of certain lack of high-yielding asset allocations. So those trends continue, and I think we can dare to say that they will continue for a good few years in the future. At least that's my opinion. In that sense, this as a driver of high valuations hasn't gone away, and I don't think it will go away in the short or mid-term. What we do see, which has also driven some competition and valuation increases, is a certain slowdown, I would say, of maybe outside Europe interest in certain sectors in Europe. There was obviously a lot of buzz about US venture funds looking increasingly into Europe. That's still there, but I would say some of them who had been on the edge of coming over fully seem to have put on hold maybe at least the immediate step. And that has a somewhat positive effect on, I wouldn't say going back to kind of normal level, which I don't even know anymore what that was, like long time ago, but like, not completely outright crazy valuations. And that is a positive, but I don't think it is something that will last. So in that sense, the market is competitive and remains competitive. There are a lot of deal opportunities, especially now. We see that after summer break, companies have been maybe holding off a little bit after, obviously during the immediate Corona lockdown months and over the summer, but now in fall, winter, we see and expect even more very, very busy season with lots of good opportunities.
Okay, excellent. Regina, sort of any input from your end, maybe also in terms of deal opportunities, but also on sort of the other side, fundraising, where you are these days, what's happening?
Yeah, I think with fundraising for the companies, if the companies have known investors before, they have a pretty good time right now because people can't travel, so they fall back on companies that they've seen before so far. But for your companies fundraising that are fundraising right now, we see good interest if they have already been engaged with the potential investor before the start of the crisis and have met personally. On the private side, in contrast to the public side, I still feel that VCs want to see the team in action and want to kind of really experience, should these be partners for the next years to come, can we really work with that team? I think this is still important. So we found solutions for example, the 2 investments, knocking on wood, that we are trying to complete this quarter, to actually, despite all the travel restrictions, to fly people into one place, to find, despite of all of the measures, ways to actually meet with the teams, sometimes in smaller groups on consecutive days and whatever, all kind of measures that we could find. But we found it really important to actually meet with people before we invested. And that has, in the end, if I look back, slowed down our investments a little bit, because, I mean, the 2 deals that we want to close still this year, at least 2 deals with maybe a few more, but the ones that are most advanced, under normal circumstances, we probably would have closed them 3 months earlier. But with also getting consultants there, making sure that all of the logistics works, it has taken a bit longer. And I think this is also something that we see on the receiving end, that actually while people are very actively looking on the private side, the pace maybe, or the time it takes has a little bit slowed down. With regards to our own fundraising, we are not out fundraising right now, although we will be fundraising by kind of now starting in towards the end of this year. And this, of course, poses challenges, and you need to think about new formats, especially about how to broaden the investor base. Going to your existing investors is something where you have established relationships, at least where the feeling is right now, also what I hear from other people out in the market, that this is doable. Whether expanding the investor base is possible during COVID, you have to ask me a year from now.
Rossen, any sort of in fundraising, has the climate made it a bit more difficult, or are you?
So we are in full fundraising mode.
Right.
We're targeting first closing maybe end of the year for a regional Southeast European growth equity fund. Obviously, when the lockdown came, we were kind of a bit worried that this will actually slow down things, and in some ways it has. But there have been a few positives again. One is that even people who you didn't know, in fact, it has allowed you to establish, I'm not sure if it's better or worse rapport, but it's actually good because in some ways they have more time, right? Because they're at home, and even if their geographic focus is not necessarily Southeast Europe, they say, well, let's listen in, let's hear, something different, something interesting. So it has allowed us actually to have more conversation probably than we would have had otherwise. Second, because you get people at home and there's a situation which is different, you can actually establish a conversation which goes a little bit beyond just here's what we do. And so it has, in some ways, even though it's not personal contact, it hasn't been that bad in terms of talking people and getting your message across. And so we've been able to talk to a lot of investors who, even new ones who are now, we introduced and they follow what we do. So that has been one positive. The other, I would say, is that especially for our region, not only for our region, multilateral institutions like the EIF and the EBRD, which are very active in our region, have stepped up to the role they should take in such a situation. So, and they're cornerstone for our fundraising. So we received support from EIF. We're finalizing our due diligence with the EBRD. So that has also been good. And the third thing has been, I think we were one of the first, maybe even the first team that DBRD, for example, did online due diligence on, which again, we were concerned how it would work, but it actually has worked very well because instead of let's say one intense 3-day session, we've had multiple sessions over a prolonged time. But the team doing the due diligence has been able to build on earlier sessions, think through and then come back with additional. So in some ways, I think it hasn't reduced the quality of due diligence. In fact, it has improved the conversation in many ways. So it seems that everything is doable online, one way or another, and it will be interesting to see how we come back to the normal world. Yeah.
That's very, very good to hear, and I second from our advisory side in deals. I think it's less of a not being able to do things, but I think oftentimes parties now focusing on what is, let's say, truly important. Where oftentimes I don't want to say in all the processes, but some processes where maybe you did many things, not all of them were really crucial to the deal or to the actual diligence in our case or value sort of identification. So I guess
Alex,
everyone's trying to put their best foot forward.
Question.
Yes.
Oh, sorry. Yeah. Now on the fundraising side, I think, Rossen, it's quite interesting to hear that you can establish kind of a personal relationship with people you haven't met before via the video. Just really to see whether you can actually put some proof to that. Have you actually been able to sign up really new investors where you had no contact before the crisis on a pure kind of electronic interaction?
So we are slightly different context as a fund than you are. So I'll give you, our first fund the only investor was the European Investment Fund that we were set up for a special program. So now our second fund is looking to broaden the range. That's one of the things. The second thing is that our region is not at the core focus on many investors, right? So, investors in Germany, in the UK, in Switzerland, Southeast Europe is not their first choice of destination. However, we've been able to get them interested in the region in our strategy. And growth equity is not the typical strategy for many investors. So it's usually buyout majority. So we're different in two ways. Despite that, we've gotten a lot of people interested to look at us. For many, they would have said, look, we don't know you, and so come do first closing and do a deal, and then we can come on board. And so we don't have anyone signed up yet, but we have quite a lot of people on standby. But you're right. I would say that for our first closing investors, which are mainly regional financial institutions and pension funds, we have still done a lot of the personal meetings going around the region. And so maybe the verdict is still out whether for second closing we'll be able to sign people without physically seeing them. But that's, at least the indication has been positive, I would say that way. So.
No, that's very helpful, and I think this is actually applying for a number of different kind of parts of our industry. So I don't think that growth in Southeast Europe is a lot easier to sell than life science we see in Europe in general and we see in Europe. I think we're all in the same boat here, that we have to really educate the institutional investors, and doing a hybrid approach of kind of getting them on the video first and then agreeing to a meeting is certainly very good. So that's very helpful. Thank you.
Johanna?
Yeah, on that note, so we are a living example of the possibility of doing investment rounds without meeting in person. We did a pre-series B just in the midst of the lockdown, brought 2 new investors on board, Global Brains and Asian CVC, their London office, but an Asian investor, and Fairway, a Swiss family offices fund. I have never met any of them in person. We did the full due diligence online. There were a few funny situations, like when one of them said, usually we come and visit the office of portfolio companies before we sign the contracts. Now we can't do that. Could you maybe send a video of your offices? So I went in the full lockdown to the office and did a film of the empty office space, and they were happy to see that it actually existed and there was space for all the people that we claimed worked for us. And since then we have had a very productive kind of engagement with them. What probably helped was that both of them are invested in potential partners and customers of ours, so it's very kind of sector specific the way we work with them. But yeah, it seems to be possible.
Absolutely, and it's good.
Maybe I can add on.
Yeah,
sorry, I can add on that point of Johanna, and I can just confirm, Johanna, what you said. We have done 3 investments in the lockdown months, of which one was completely remote, like we never met the team in person, a full complete remote due diligence, and also we had two investments where we only the deal team, 2 people met the founders and visited the office, but the entire due diligence, technical due diligence included legal. So I found interesting when Regina said that it took you now longer for the D, because for us it has actually been the opposite on at least the 3 ones that we did in the more difficult months. Just wanted to add that.
But another point that Regina addressed was this, potential investors that we've been in touch with previously are now increasingly getting back to us. So apparently, them not traveling and not meeting potential new targets results in going through their books and checking up with previous contacts on where they stand. So that is really visible in the last few weeks, I would say.
Yeah, excellent. Yeah, and it's good that you sell investors on your business model, and you don't have to convince them by showing your posh offices. So I guess you have the sort of the
5 minutes left.
The core substantive element tackled. We have one question from the audience, and that's to Regina. In your effort to broaden your investor base, are there any new LPs that are getting interested in venture capital?
Yeah, absolutely. I think in general, the weathering of the storm that the venture industry has shown in general has been very helpful during the crisis, and life science, of course, is in my view the most exciting sector there. But in general, we see, especially in Germany, where it has been hard to actually get institutional investors excited, we do see an openness. So there are several initiatives in Germany currently running, one by the KfW Capital, where they're trying to set up like a fund-of-fund construction to motivate more of the larger capital collection centers, like the insurance companies, like private pension schemes in Germany to invest more in venture, and we do see absolutely renewed interest in the area. I think this is also kind of now the venture industry has weathered the 2008 crisis. We seem to be weathering the current storm. Of course, the long-term jury is out, but at least in the short term, and that is giving also people that have been more reluctant now more of a confidence that this is a sector that they should have in their mix. But I think we all still have to continue also via the organizations like the AVCO who's organizing here, or the BVK in Germany, Invest Europe, to sing the song that actually venture growth investment in Europe is really something that should be in the mix of every investor.
Excellent. Thank you. Yeah, I mean, in terms of lessons learned, if there are any, Johanna, on the operational level, do you have any key takeaways, or is just, the next crisis, it will just be very specific again and you can't prepare, or do you have a sort of takeaway for your best practice as you move along on the operational level?
I mean, what we certainly did was that we increased focus on kind of planning and forecasting, and that's something that we will continue to expand on, just in order to be prepared for any next developments that might come. And then, I mean, as a growing company, obviously you think about the next steps in terms of funding more or less all the time. And given that we don't really know how the market will evolve or the overall kind of sentiment will develop, we're definitely planning differently for the next fundraising now, and are making sure that we have runway that is sufficiently long, and we would want to keep that going forward too.
Okay. We actually have another question, and that, again, Johanna, is to you. Do you experience the same with your customers? Do they sign big contracts in a sensitive industry without a meeting? Or sort of are the investors in this regard ahead of this quote-unquote digital movement?
No, we also see that with our customers. So in many cases, they just have to do that because they are kind of accelerating their automation and digitalization efforts. And since there are no possibilities to meet, especially with those potential customers that are further away, we do full digital conversation with them without any kind of physical meetings.
So even financial institutions are nimble enough to follow the trend.
Yes, and we've had some difficulties with kind of contract signing because in some areas they do that digitally, but in others not, and kind of sending hard copies around has been a bit more challenging due to people sitting in their home office, but otherwise it has worked so far.
Excellent. Well, I think we're getting the time sign, but I think overall, it's in a nutshell, it's good to see that the community and the industry has come together to weather the storm, to sort of take silver linings out of what is an otherwise, of course, a very unfortunate situation. But it's good to hear that both investment and operational activity are trending in the right direction. I think it's been interesting to also witness how there is a renewed sense of optimism across the board. Of course, not all industries are equally fortunate to look at positive trends in the next few months and half a year. But I think overall, it's refreshing to hear that we're all looking at this in hope and sort of educated hope that things will get better and that investments will continue to thrive. So I think with that, I'd like to thank the panelists, both here in person and on the screen, for your valuable contributions. It's been a pleasure, and hopefully we're all going to be tracking your developments as you move forward, and we hope to sort of recapture this moment in some time and see where that took us going forward. Well, thank you very much.
Thank you.
Thank you.
It was really